FM, stesheni ambayo itakupa fursa ya kupata uhondo kamili wa pwani na kuleta Wakenya pamoja.
Pwani FM, tafrija ya kipwani.
Kila mwisho wa juma kwenye runinga yako ya KBC Channel 1.
Tunakuletea Mkulima.
Ni kipindi cha kila mtu.
Iwe wewe ni mkulima mdogo, mkulima mkubwa, muuzaji au mnunuzi,
au yeyote anayenuia kuanzisha kilimo ama ufugaji.
Tunaanza kwa mbinu bora na za kisasa za kilimo, ufugaji,
fursa za kibiashara, kuongeza thamani, pamoja na teknolojia za kuboresha kilimo.
Ni chakula ambayo kwetu sisi inatuletea mapato mazuri, watoto wanasoma vizuri.
Mkulima kisasa inakupa maarifa,
motisha na suluhu za kurahisisha mazao,
kuongeza kipato na kulisha taifa kwa ujumla.
Tazama Mkulima kila Jumamosi saa 10:30,
ambapo kilimo na fursa zinapatikana.
Mkulima, tuko hapa kwa ajili yako.
In early 2021, the capital city of Nairobi was classified as the dirtiest city in Kenya, with a US Air Quality Index reading of 73. With a figure such as this, the air quality can be classified as moderate, according to recommendations by the World Health Organization. To that end, innovators partnered with county governments to deploy devices that could warn and monitor air quality.
Consumers of this data are mostly researchers and government entities. Research informs policy. And so both these parties need data. You cannot treat what you do not know.
Companies like Air Quality Systems say different devices can be deployed around the city depending on several parameters.
In terms of air quality monitors, we have from the most simplistic ones, the most basic ones, to now the most complex and most regulated gadgets.
Air quality testing is achieved using various devices, such as a passive sampler like this one, that work using the principle of diffusion, using a diffusion tube that is placed into a protective shelter to collect data by analyzing different gases. Another air monitor is a U-Pass sampler, which can be worn and is 99% accurate as a reference station. The other is a low-cost sensor, which is also fairly accurate and can be deployed in numbers. It has also sensors that collect data through its breathers, which are then analyzed and corrected on the computer. This notwithstanding, players in the sector, however, now say there has to be adequate sensitization on air quality for air quality monitoring to be enhanced across the country.
For awareness and culture, that has been a huge stumbling block, because you have to this thing is harming you, and they can't really feel it or smell it. A lot of education has to be done, and public awareness campaigns.
Let me explain this because it's interesting. Have you ever wondered where the smoking bans come from? Factories releasing CO2 into the air, or vehicles giving black smoke, and even the smoking ban from cigarettes. These policy directions come from data research that come from these particular devices. These air quality monitors inform the research that then brings out the policy directions that give these bans. Alan Naoko, take one.
Good morning and welcome to this week's edition of Biz Check. My name is Njue sitting in, and welcome today being the 22nd day of January 2026. But I don't know how your 2025 was, but it was a very tight year for many of us, and a lot of Kenyans did notice that indeed the economy and especially their income and their savings going down. But 2026 heralds a new era where we can change all that. But can we? How is the economy? How are we saving? How are we protecting what we have? That is a discussion that we are having, and today we are moving beyond the financial cliches, and we are asking the hard questions on how to survive this economy without denting your pockets. And where should your money go this year, 2026, and where should it not go? So we are looking at smart money choices for the year 2026. Good morning and welcome. My colleague on the sign language interpretation is Susan Thuku. Of course, we value your input. We are live on all social media platforms, including YouTube and also our KBC digital app. Welcome. And without further ado, allow me to introduce my panelists, beginning from my immediate left, where we have CPA Esther Wamalwa, who is a member of ISPAC. That is, she's also a financial consultant. Karibu sana.
Thank you.
Just next to her, we have Kennedy Monyoncho, who is a director at NWealth Financial Services. Karibuni.
Thank you.
Very quickly, maybe to tell us, let me begin with you, Ken. What exactly you do at NWealth that is touched on the topic of the day?
Well, at NWealth, I'm a director of the NWealth Capital Unit Trusts. And unit trusts deal with investments, basically allowing people who don't have too much time to get into the stock market and buy individual stocks. You can actually buy a unit trust. We deal with the money market, whether it's fixed incomes, whether it is dollar income, or whether it is equity income. That's what I'm actually currently running with. Yes.
And you, Madam Wamalo?
Thank you so much. I do so many things, but in relation to the topic of the day, I'm a wealth creation and preservation consultant. This means advise clients in terms of what wealth they can invest in. Yes, you have the investments, but are they creating wealth for you? And once you have it, how do you preserve it for the generations to come? Yes, thank you.
From that brief introduction, from your professional perspective, how would you describe 2026 financial mood? Because 2025 was a little bit technical and tight for many Kenyans.
Thank you very much. Yes, and not only Kenya, globally. And even in the midst of all this global pressure, there are opportunities. There are investment opportunities, both for individuals, for institutional investors, for SMEs who have a medium to long-term view. And just to give a quick recap, in terms of individual, you have, even institutional investors, you must have a financial goal. And then with the financial goal, you match which investment opportunities that you can be able to tap in so that you can be able to meet your financial goal. Yes, it has been challenging, but as challenging as it is, there are opportunities.
And I'm looking at, Ken, I'm looking at 2026, and many people, you know, ushered in the new year with very, very big hopes of a prosperous 2026. But you know very well, in January, we always say that it has around 60 days, and we are around the 5th day. And many people have counted January being one of the hardest months. And if you begin a hard month, then it's quite hard to pick up the pace. Are you looking at your crystal ball, 2026?
Yes.
Whether the financials, what are Kenyans most keen on? Is it income, debt, taxes, or all of them?
Let me begin by saying that we have made the month 60 or 90 days, as you call it.
Yeah.
Because it is possible that you can plan for your December. I can plan my December the previous year or the beginning of the year, like right now in January. You can actually plan for December because the biggest spend we have is in December. People are going on holidays, people are traveling, and whatever it is that you want to do that time, you can actually plan for it. So if we don't do anything, Njue, this year, and we don't do anything from now, we'll have the same question asked next year in January 2027, how will it look like? Because issues of finance are about discipline, are about decisions you've made, about how you're going to spend your money. And therefore, whereas opportunities will be there in 2026, there are still those who will say, you know, this year is going to be worse than next year. And my previous colleague has mentioned, that actually opportunities exist. But are we willing to look at the what do you call it, where these opportunities are, or are we looking at the difficulties that we will face this year in 2026? When people are making losses, there are many who are making a lot of money. You see that? There is always a cycle. And it's about fear, it's about risk, it's about moving into the opportunities that exist. And that's what makes the difference to anybody who wants to make money in 2026. Yes.
And Esther, picking from where Kenya has left, is that we really need to restructure our budgets. And we have had to do that. In my household, there are some things that I used to buy 5 years ago, but I'm not buying them. Or if you have to buy, you don't buy the big one, you buy the economy ones.
Yes.
And how do we, especially households, restructure budgets when expenses keep rising, especially in diminished income as well?
Yeah, thank you very much. And it all begins with financial planning. You know very well in terms of what are your incomes, what are your revenue streams, what is it that is generating income for you? Is it a salary? Is it you're in business? Is it whatever it is that's generating income? And with it, you have to plan and ensure that your expenditure is either equal to or less than whatever is coming in. That way, you wouldn't have pressures now to go into debt and fund your lifestyle. So it is all about proper financial planning, knowing very well, these are my requirements, this is what I need in a month, and now you go for that, whatever is critical, whatever you require, and whatever is within your budget, which now corresponds to whatever income that you're getting. Yes.
Could I add something?
Yes, yes.
There is a financial principle that says you need to live just below your means.
Below your means.
Below your
within your means.
No, it's better below, at least a shilling below, so that you have an extra to save, you know, something like that. Okay? Within your means is basically the same as below your means, but we don't want the boundaries to be extended so that you get into debt, as she's saying. Within your means can be a bit fluid, but below your means. Should you want to spend more, then you have to make sure that you earn more. All right? Where you are seeing that your budgets or expenses are increasing, the option you have is to find out, do I have additional skill? Do I have additional assets elsewhere? Where can I be able to make an extra shilling that can be able to address that expense? So it's important that you're able to look at both sides. That I'm not just waiting for the expenses to continue increasing and my salary is at the same place, but I have an opportunity to also expand my income base. Yes.
Yeah, still on the same,
yes.
How do we ensure that we have financial discipline? Because I believe sometimes that's where we go wrong.
That is can I call it, is $1 million question. How do we have discipline? Discipline is personal. It's personal to be able to do what you must do, when you should do it, whether you feel like doing it or not. That is really a basic definition of discipline. And unless you start, I like what one of my motivational mentors, Jim Rohn, says, if you want to start big, to do something, then you better take baby steps to get where you want to go. For example, you want to say, I would like to start paying myself 10%, all right? I want to pay myself 10% every month. But how does it start? Does it start by 10%? No way. It's not possible. But I can start with 1%. I can start with, then I go to 2%, all right? And then, because sometimes we don't have the discipline, the best you can do is try to automate. Make it automatic so that it becomes part and parcel of what you always do. And once you get used to it, then you are able to live within that level of discipline. Because unless you do it repetitively, you will not start doing it. Yes.
And maybe just to add on that, in as much as discipline is a personal initiative, but you must have plans that guide you. And that's where we talk about a budget. You know, you have to have something that is guiding you. And that way, you will be able now to know, have a picture in terms of these are my incomes, this is my expenditure. So, and now that's where now the discipline comes in, because now you know exactly what your requirements are and what your sources of income are. And now it is now up to the individual now to be disciplined enough to ensure that that has been executed. Thanks.
And hard times have pushed people to digital loans or mobile credit. Is this a convenience or is it a financial trap?
Back to the discipline we are talking about. Because if you know very well, this is what I'm getting, you have to budget, and that's what I was talking about, equal to or less than. And I've liked what my colleague has said in terms of always budget below what you're aiming at getting. The convenience that come with these mobile loans that you're talking about, it is because you've seen something or you want now to acquire something that is not within your budget, but because there's that convenience of this money that you can acquire, you get it, and most cases, actually, you really don't need that particular item that you are going to get. And if at all you're saying it's the hard times that have pushed people to go, it's usually a cycle, because you will take this month. Come next month, you're already starting from a deficit, and it will be a cycle, not to mention the absurd interest rates that come with it. So it is all about back to the discipline, stick to your budget, and just live below your means.
Ken, I've seen many people now diversifying. You see, you know, I'm working here. I have some warus and some potatoes. Some
yes.
I'm farming. How can diversification help, and especially when it comes to investing? Because at NWealth you have a wide range of investment plans, but many people are not taking them up.
From where we stand is that, first of all, there's a lot of information gap. People are not able to get information that is practical and that is easy enough to consume. So it becomes a very difficult thing to think about. So when we speak from a financial perspective, our lingo is so complicated. By the time we finish the discussion, people, they had finance, they had money, they had investment, but they don't know then what do they do from there. Now, diversification is important because what it does, it just helps you to manage the risk of the kind of the different assets that you have. Because if you look at what happened 2 years ago, when the bond interest was very high, shares were not doing very well. They were very low. All right? So somebody could have decided, I just want to go into a market where I can get very high interest. All right? But last year, the opposite happened. Okay? Shares did very well, but the bond market interest went, because there is an inverse relationship between the two. But if you're able to get a balance, and especially the balance that tells you, you know what, in good times, this will do well. In bad times, all right, this will do much better. So you are able to ensure that your income is consistent without necessarily having very high ups and very low downs for you to be able to have that balance. So diversification is key. You can have financial assets. You can even have a business that you're running. You can have fixed assets, land and houses and so forth. You can still have those assets in a way that is balanced. But again, that balance continues to shift as you become older. Because you want to move away from too many assets, but to cash or very near cash the older you grow, because you want money in cash form. You don't want money that is in 5 buildings and sometimes there's no rent coming here, but you like to have opportunities or assets where I can easily get my money from. So diversification remains key. But again, that is as you start your investment process. And as Esther said here, that it is important to know what are your needs. All right? If I know my needs, I can know how to diversify. I can say I want this in financial assets, I want this in business, or I want this in some kind of fixed assets. Yes.
And Esther, what common mistakes are Kenyans, financial mistakes are Kenyan making, such that you find that January is known as a very hard month for Kenyans?
Yes, and that is back to proper financial management in terms of planning. And if you don't plan well, you will fail. And when the year starts, you know very well this happens in this month, this happens in this month. And naturally, a lot of expenditure happens in December. So as the year starts, as an individual, as a business, why can't you, if we start now from the individual, why can't you plan and know very well, these are my requirements, come December, these are my requirements, and even start saving towards the Christmas festivities, the travels that you will have. If you'll go on holiday, start planning. Know initially how much you will require and start saving. Have a fund, as a fund towards it. That way, when it comes to December, even when you're paid, it will just go to your normal monthly expenditure and not now eat into the festivities, so that when you come January, now you're already coming to a deficit. Number two, in terms of things that need to be done, even like school fees and all that, if that you know very well and you know beforehand. So with proper planning, that you can be able to take care of. And yes, there are times that you've planned and the emergencies that happen, unforeseen circumstances. It's normal. There could be a death in the family, there could be illness. And that's why it is normally good to have an emergency fund to cater for such. It might not solve the problem in entirety, but it will not shock you. And it will not like give financial shocks to your budget. And even as we live, you know, we don't know about tomorrow. You can be involved in an accident and you're incapacitated, and you can no longer work. You can no longer do your business. Have you cushioned yourself so that in the event of such, you are well catered for? And that's why we always advocate for passive income. When you talk about passive income and active income is the income that you regularly get from, say, employment. But passive income is where now you're getting this income from investment. Maybe you have your rentals, maybe you invested in government securities, in bonds, treasury bills, or in money market fund. With that, every month you're having some interest income coming in. So in the event of unfortunate happen, maybe a death in the family of the breadwinner, or is incapacitated that can no longer meaningfully work, that flow of cash is still coming in and is able to cushion the family against any financial shortfalls.
Ken, I'm looking at Kenya being a middle income country, and a lot of Kenyans are just living with there are not many options to save because of the shrinking payslip or the shrinking income. What are some of the investment options for middle income Kenyans at this moment in time?
Great Pandora's box opening and talking about middle income and talking about even Kenyans not even being there in terms of the middle income. When it comes to investment, Njue, the important thing is to develop some kind of principles when it comes to finances. It doesn't have to check in when you're making a lot of money. For example, because I'm earning middle income economy income, now I can be able to go ahead and invest. Not necessarily. The big thing that we just need to understand that it is the accumulation of the little practices that contribute to huge growth. I'm sure you've heard about if I gave you $1 million today, or I gave you a penny a day doubled every day, which one would you prefer to go for? People prefer to go for
the big one.
Of course, you go for the million. But do you know if a penny, an American penny, if it doubles every day, you'll make more than $1 million at the end of the year? But nobody wants that.
You want the big
no,
one.
You want the 1 million now.
Yeah.
So that's why I'm saying that the principle should be, irrespective of the economy, irrespective of the income, the practice and the principle should be, I have a good habit of saving the little I have. That is what gives you a break in terms of finances. It is not that I have a higher income, because the higher the income, there's a law called Parkinson's law. The higher the income, the more it grows to catch up with the expenses. So if your expense increases by 10,000, I'm telling you, the income that increased last year will go to eat the expenditure that was increasing, unless you decide on your own that I have a discipline enough that any increase I get, I'm not going to spend. It automatically happens. The more you earn, the more you spend, unless you decide it will not happen for me.
All right, just hold the thought. Let's first of all cross over to the Sarova Stanley, where we are having the Institute of Public Finance releasing a report on the state of the Kenyan economy. The report gives a perspective on the current economic situation and an outlook for the year ahead, 2026. And currently speaking is Dr. Margaret Nyakango, who is the Controller of Budgets. Let's first of all listen in.
To continue to do at the Office of the Controller of Budget, and more so reflecting similar thoughts to those of many in this room. We have a version of that report on our website. If you, on your desk, you can see a QR code. We are trying to reduce our carbon footprint at IPF to support the government in the same. So please see the soft copy. There are a few hard copies, but they won't be sufficient for everyone. This discussion is timely, and we want to give an opportunity to us in the room. We'll take the media interviews later, but if anyone in the room, our partners, our colleagues, our civil society and government actors, has a question or reflection that you would like to submit, we'd like to open the room for that opportunity.
As I mentioned earlier on, that is just a live feed from the Sarova Stanley, where the Institute of Public Finance releasing the report on the state of the Kenyan economy, and quite a coincidence that we are also looking at an outlook of 2026, and especially when it comes to matters investment and spending as well. We're getting a little bit more in regards to that a little bit later. But again, I am hosting two very distinguished members who know a thing or two about finance and wealth. And it's a good time to take a pen and a paper to just note some of the things that could change your 2026 financial outlook. Now, we are also looking at some of the smart money decisions that somebody can make, Esther, when we come to 2026, because everyone has something that he or she wants to do in 2026. I want to open this, I want to do ABCD, I want to scale up my farming. What are some of the 3 smart decisions that someone can make, investment decisions, in 2026?
Thank you so much. In terms of the investment decisions for 2026, and we have just seen that the outlook for 2026, though we haven't gotten the figures, yes, in as much as the conditions, and this we're not just saying about Kenya, it is globally, and the cost of living has really gone up. And with that, definitely with most families, they've really tried to tighten the belts, just to say literally. But that said, which investment opportunities do you have? Because at the end of the day, even as you're doing that small family budget, it's the income side and the expenditure side. If the expenditure keeps on growing and the income is not growing, then it means we'll have a deficit. So you have also now to look at how am I going to increase whatever the income side of my budget. And let's say you are employed, just like normal households and very many people, and you're working on a very tight budget. So some of the things that you can do is agriculture and agribusiness. And we are not talking about look at value addition, so that you're not looking at just raw production, because the margins are an issue. But you can start from somewhere. And as my colleague had said, even with the little that you have, start from somewhere, save consistently, and you will be able now to get the investment. So we have the issue of agriculture that you can be able to tap into. There's the issue of green economy, where the issue of ESG, where you have that you're looking at being into business that are economically viable, but they are they protect the environment, they are socially inclusive, and they are well governed. So if you look into such like business, that will be wherever will be a plus for you. And there are also so many opportunities when you talk about climate, smart climate. We talk about ESG aligned businesses. We talk about that green economy, because right now the issue is about sustainability for most businesses. And then now when we look at government has offered opportunities where people can invest. We have the short-term and long-term in whatever securities. That's when now we talk about the treasury bills. We talk about now the bonds. With the treasury bills, they're usually short-term, 3 months, 6 months, and a year. And with that, someone can invest in. And how it works is when you're buying, you buy at a discount. And now at maturity, you're paid at par value. So the difference is your return, which is the interest. But if now you can be able now to you're looking at the mid-term and long-term, you can invest in bonds. And with the bonds, they give the interest after 6 months. But that is long-term, between 3 to 30 years. There's also the infrastructure bonds. And the beauty about infrastructure bonds is that like their interest is tax-free. So the returns are higher. You can also look at the money markets, and I think my colleague will speak more to it. Money market, where you can just use your phone and you'll be able to invest. Let's say, even right now, let's say you have some money and you want to spend it in over Christmas. You look into wherever money market, and the beauty of money market is you can always access your money as and when for any emergencies that you have, or you're saving towards school fees, or any family projects that you have. Another thing that people can tap into is the issue of, and you talked about the middle class, the growing economy, and with the growing middle class, meaning that they have the capacity and the willingness to spend. So, and there are opportunities in the housing, in the education, in the infrastructure. So you can be able now to look at rentals, and you don't have to look at high-end rentals. Is whatever is within your budget. And in terms of when I started, I talked about an individual having a financial goal, and now matching whatever investment towards your financial goal. So you can do anything within your means, whatever you are able to do. The issue here is discipline, and you have to be consistent, and it's normally long time. You know, you cannot, people should stop this issue of thinking you can always get returns. And that's why most people end up losing money, because now you end up in these quick, rich schemes, and you have not even done your due diligence, you don't know much about it, and you end up losing a lot of money. So those are some of the things that people can tap in.
Okay, let's build from where Esther has left, because looking at Kenya 15, 20 years ago, the money market, the capital markets, everything in terms of financial opportunities was not as robust as it is now.
Correct.
You're hearing about money market, you're hearing of bonds, you're hearing of securities.
Yes.
Looking at 2026, which could be the best avenue for Kenyans to invest? And I'll refer to what you first of all said. There's the issue of information.
Yes.
Even the working class, a lot of them don't even know how money markets work.
That's
they don't
correct.
even know how shares work.
Yes.
Which would be the best avenue, according to you? And which are some of these avenues that you have seen at NWealth, people preferring, especially in January?
All right. Thank you, Njue. I'll just pick it up from where we mentioned. Maybe I just want to add a couple of things that people can, some smart decisions they can do. They can start, first of all, if they can know where the money is going, they will then understand how to stop it from going where they don't want it to go. Okay? That's very important. Because what my colleague has said, they are good investments, but they need money. You know, Kenya has got great opportunities. I mean, we are not food sufficient. That's an opportunity. You can go do that. We don't have enough sugar in this nation. We don't have enough rice. We don't have enough wheat. Those are great opportunities, but they need money. So the essence is, how do I then make this money? Either I go to the bank and borrow some money, or I save it myself so that I can get into business based on the money that I have actually mobilized. All right? So get to know where your money is going and stop it from going there so that you can either accumulate it for you to get into business. All right? Learn to pay yourself fast. For me, that is my greatest principle. Because when you pay yourself fast, you mobilize money faster than waiting to save from a budget which you yourself, you know it's very limited. What that means is when you receive your pay, top line, remove what you pay yourself. Not what you're going to spend going shopping. What you pay yourself is now what you're going to invest. So assuming you earn 100,000, and I'm saying pay yourself fast, it means before you spend anything else, pay yourself 10,000 every month.
You save 10,000 before even you touch your
Before
salary.
you touch rent, before you touch fuel, transport, pay yourself fast. So a minimum for me is 10%. So if you do 10% per year, Njue, how much will you have at the end of the year?
That's 120,000.
Thank you. Is that good enough for Christmas? Is that good enough to take your kids for a small little holiday without touching December salary? I mean January salary? You can do that very easily. So it's just practice of saying, can I find a way of paying myself fast? And that's why I said, you don't have to start at 10%. You can start at a 1%, 2%, because maybe your budget is constrained, so you can't get there. And then, of course, she's talked about an emergency. It's important you set up an emergency fund. Don't be going to your money in the bank when you have an emergency, or don't liquidate your assets because you have an emergency. Set up an emergency fund that can take you up to 3 or 6 months. Should you have an emergency, you can access it and then you can replenish it. If you do that, then you are good to go in terms of now dealing with money to go and invest. Because many times we are consuming money to go and meet emergencies, whereas if we had an emergency fund, that money can deal with the emergencies to allow you to spend your money on assets that can give you returns. So back to the different avenues that you've mentioned about at NWealth. As I mentioned earlier, I'm basically running the NWealth Capital Unit Trusts schemes. And of course, people, especially the money market, is a new product. We've come from an era of savings account and current account. All right? So, and that's all many of us know, just that. In fact, most people would like to see their money sitting in the savings account so that every time they go and check, they say, my money is still there. And they feel happy about it. But that's a very poor mentality, because money should not be saved in an account. Money should be with other money, making money. Because in life, you want to work very hard and make money so that that money you invest it to make money for you. You don't want to work forever for money.
Because many people used to, you know, you have like a million shillings, you put in a fixed deposit.
Fixed deposit. Let it sit there. You know, I can, after 3 months, 6 months, and so forth. Now we've got better products which allow you to be able to access the money yet make interest. Like the money market is not a very new product. Traditionally, we've had the capital markets for a long time. I mean, since when it was licensed sometime in 1990s. It was licensed. The Nairobi Stock Exchange came, and therefore it was allowing people to be able to invest in equities, you know. But because people thought the stock market is like pata potea, you know, there's always like they were feeling bahati nasibu. So many people just buy and they wait for it to make money and they take the money out. But they don't understand that investment is long term. You must think, I like what she said, it's a goal. You must have a goal. Why am I investing? It must be either I want to buy a house in 10 years, or I want to set up a school fee structure for my children, or I want to actually invest for retirement. There must be a goal. So if you go to the stock market and just jump in and jump out, then you actually don't have a policy and you don't have a goal, which is very important for you. So money market is a new product which introduces what Einstein says is one of the seven wonders, according to him, quote unquote, is compound interest. All right? Compound interest. Many Kenyans know only simple interest. Simple interest is if I invest 100,000, I will get 10% interest at the end of the year, which is 10,000 shillings. Then the following year, I invest my 100,000, I get another 10,000 shillings. Now, compound interest says we will pay you interest on interest. So you have 110,000 at the end of the year. It will invest that 110 to give you interest on interest. That's the power of compounding interest. Because if you invest like 5,000 every month for the next 20 years or so, you'll be shocked that you'll leave the bank with about 1 million shillings. With 5,000 every month for like 10, 15 years, you'll end up with 1 million shillings. So you can imagine the power of compounding interest when it's compared to the normal interest. So when we have the money market, what the money market does is it allows you to actually compound your interest on a monthly basis. You see, savings account is every year.
Yeah.
They'll tell you if you save your money with us, we'll give you 3% at the end of the year. And it's 3% or 4% or 5%. Money market says, you will put your 1 million with us. We will give you 10% at the end of the year, which is about, what, 100,000? Yeah. But what will happen is that this interest will be calculated on a monthly basis. So it's accumulated on a monthly basis. So would you, if you would like that interest to be added to your principal, we will add it so that we pay you interest on month 2. And then on month 3, they'll pay you interest on interest of month 1 and 2. They'll add it to what you've already invested.
Which is better return.
Which is, of course, a better return. Yep. Or the option is you can withdraw your interest. So you leave the principal there. Don't touch the principal. You see how flexible that is? Yeah. And which is a very good product, I think, for anybody who has some money and they're saying, look here, I have a monthly expenditure of, let's say, 30,000, and all I need is 30,000 every month, and I have some 1 million shillings somewhere or 2 million. I just put it in the money market, and every month I'm able to withdraw. So that for us is one of the good products. I like the equity product because I'm more risky myself. I take a bit more risk. Because equity can give you a much higher return. The end of 2024, let me surprise you, equities brought home 35%. Now,
5%. Yes, fixed deposit.
Exactly.
We are fixed deposit with the best we are doing is 7 to 10%.
Even bonds were giving 18%. That's what I'm telling you. You should be able to
let your money work for you.
Let your money work for you. Take a bit of risk. I know all of us are scared of risk, but risk can be a good thing. Okay, so if you had your money in equities, 2024 end, the return was over 30%. And therefore, you also need to know now what is happening. Where can I or when can I invest in stocks? So we have the equity side. You can buy units in the equity side. You can buy money market in terms of units also. We've got the fixed income. So what we do, we buy the bonds and the treasury bills for you. So you buy like units so that there's what you call, you use the collective the collection of very many people who have bought. So there is what you call economies of scale, and therefore you're able to negotiate a better rate, and people are able to get a better return. But again, it depends on what you're looking at, because fixed income has got their disadvantages. All these products have got plus and minus. I mean, fixed income, if you are coming for fixed income, you have 1 million shillings and you're waiting every 6 months, because fixed income comes every 6 months based on what we get from the central bank. It means you won't get it as frequently as you want, and yet it is not inflation adjusted. It means if I have 1 million shillings today and I'm getting 10% for the next 10 years, that 1 million, the value of that 1 million in 10 years will not be 1 million. Yep. And therefore it is not a good product if you're looking for that kind of return of income. The better product to look at is equities, because equities grows with inflation adjustment. So you don't lose any money and you don't lose your value. So any of these items, anybody can join. I mean, the joining amounts are very low. It's very affordable.
How much are we talking about, just for example, for our viewers?
Money market is just 100 bob.
100 bob.
Open your account, send 100 bob, and you start from there. But don't expect to make 1,000 in 1 year.
From 100.
I know people put some money and they imagine it is going to make a huge impact. But you can open an account. But why put 100? Just put in whatever you have that you can invest to get a good return on your money.
Yep. And let me pick from where Ken has mentioned that you really don't need to put, if you have 1 million shillings, a fixed deposit. That is the old-fashioned way of doing things. But there are so many people who are old-fashioned to the point that they would rather put their money in a fixed deposit account or invest in real estate.
Yes.
Let's take a look at real estate. Is it quite as it is, or maybe 10 years ago, 15 years ago, it was far much better than it is now? Or would you still advise somebody to invest in real estate?
Real estate is interesting because now, one, the initial outlay of cash that is required definitely is high. And it will depend on so many factors in terms of where is it located. If it's in an urban area, then chances of you being able to recoup and making even money out of it is high than, let's say, maybe in the rural areas. So the location maybe is also very, very key. And also, depending, you need to also to do a market survey in terms of the requirements of the region. You know, that requirements, what is it that people require? What is it that has high returns? What is it that is marketable? You know, these things keep on changing, because I remember there's a time when now everyone was doing the hostels for accommodation, and they ended up tying in a lot of money in there. And even recouping what was put in there was not possible, because students would want to spend as little money as they could, and with that, so many people ended up losing. So it's about being strategic. It also depends on the location. On the location, and also just do a very comprehensive survey in terms of what are the requirements and what is more competitive, and what does the market require, what is the gap in whatever region that you're doing. So you can still make it with the real estate, but you have to take all those factors in place.
And Ken, I've seen people also invest their pension and into some of the products that you guys have. Is it risky, and would you advise somebody to also think about that?
Pension is very important. Pension, I wouldn't advise anybody pension to go in to spend your pension in real estate when you're retiring. But you want your pension to pay you for the rest of your life. All right? You can access lump sum, and most people get lump sum. There is a statutory minimum that you cannot get until you are, I think the age now is 60. Above 60, you can get it tax-free. But if you retire at 50, 55, there is a statutory amount that you cannot withdraw. So you leave it there, and they'll invest for you. But once you get the lump sum, you can actually, we have products that you can use as a product called income drawdown. What happens, we'll take your pension, we'll invest it. It will be making interest. All right? So what happens is that we can agree how long do you want to draw down your pension. You can tell us 10 years. Actually, the maximum is about 10 years. All right? And then, so the money is invested, and every month, depending on your liquidity needs, you are able to draw down your income. Or you can just buy a pension that gives you a flat figure and tells you we'll give you this until you retire. Our advice is that when you are with your pension, ensure that any asset investment allows you to be able to get cash flow on a monthly basis. Any investments you're thinking about, it should give you cash flow, because cash flow is what keeps you alive when you have retired. If there's no cash flow, my friend, you die much faster than you had expected. So if you have a pension, don't start building a house if you've never built one. I think that's very late in life. Just find a way where you can a money market is a safe place to put it in, or a bond is a good place to put it in. I know there are bonds in the market that are up to 30 years. So you can decide for the next 20 years, I can put my bond. I've got my lump sum, which is 20 million shillings. Lump sum in the bond giving me 20%, which is 2 million per year. 2 million per year is approximately 150,000 per month. Hey, 150,000 per month for the next 20 years? Why not? All right? Yeah. So don't think about fixed asset. Don't look at illiquid assets when you have your pension. The time to think about assets is when you are still employed or when you're running a business actively. That's the time to think about assets. And you are generating assets that are going to give you passive income that Astap talked about when you have retired. But don't think about that when you have retired. When you have retired, just manage your pension.
I'm also looking at, Esther, how financial records, how important they are. Even for the smallest and the tiniest of business. I'm saying this because I've seen a boda guy, he's a former University of Nairobi student. For the past 2 years, whatever he makes, he writes it down. You know, he showed me a book and I was amazed. Each and every day, he writes down everything and every expenditure. If it's service, if it's brakes, if it's tires, if it's any, he puts them down. And tells me that gives him a financial outlook to see exactly what exactly am I making? Should I go to work today? You know, how much money have I made today? How important are financial records for everyone who is making something, especially for the small scale traders?
Yeah, that's very good. And the issue, you cannot overemphasize the issue of financial management. You can be able to manage, you can be able to plan when you have the records, when you have the figures, when you have something to refer to. So with the financial records, it's usually very important because now you will be able to know how are you spending. Are you spending, are you overspending? Are you spending within your budget? You know, you can be able, it even shows a trend. How is your expenditure? So you'll be able now even to tame or track, or even now be able now to change if needs be. Same as income. You can now be able to tell and do your forecast in terms of which are the good months. You can imagine now these people in the informal sector, they can be able now to plan well because they have the records and they can be able to see that actually in December I make more income and now plan accordingly. Even as government institutions, we are able to know how governments are doing well or they are faring on in terms of the records that are there, in terms of what is their net worth, what is the GDP, for example, of Kenya, what is the GDP of the US. So with that, maybe the economies are able now to compare. So if, as an individual, you don't even, you know, that should be your first step in terms of what is even your net worth. What is it that you own? What is it that you owe? And then with that, you are able now to plan accordingly. So, and it can be as simple as, you know, just taking a book. You don't have to be in any accounting class. You just take a book and record, these are my daily expenditures. At the end of the week or at the end of the month, you will be able to see how you're faring on. This is what I've been able to make. Now, at the end of the week or at the end of the month, you can be able now to see. And now with that, you are able now to plan accordingly. Thanks.
Ken, we are looking at financial, you know, red flags.
Yes.
If you remember the pyramid schemes,
yes,
they were here for a while before Kenyans really knew this is a red flag.
Yes.
Which are some of these loopholes to avoid when you're investing in 2026? And I will refer to what you said in the beginning, where there's lack of information for so many products, and you will find somebody investing something, and then after a few months, is like, you know, this is not working for me, because he wanted maybe 100 to make 1,000 shares.
Yes. I think let's begin by saying let's be wary of greed, because if you are not greedy, you can most probably make good choices. Sometimes it's important to remove emotions from investments, because when you're investing, it's a very laborious, very slow process, and people don't like slow processes. Everybody wants everything quick. For example, if I tell you, like I've just talked about paying yourself first, and I tell you, you know what, pole pole paka mwisho wa mwaka. So somebody starts thinking, hey, every month, why can't I just do it in 1 month? It's not possible in 1 month. So what people need to be very careful about is that investment, it can be very slow, but it's very rewarding. I think it is the reward that you should look at more than the pain of putting that money aside. What kind of reward do I get at the end of this investment? Now, one of the things we need to you talked about red flags, all right? Red flags. You know, when there's greed, what likely happens, you go for any opportunity that you see is giving you a lot of income. And one of those was the pyramid schemes. And there are many of them, by the way, even now, but they're very quiet. You never get to know until you go online and you're trying to invest, and they tell you if you put in, you'll get 0.5% per day. And you're very excited. 0.5% per day doesn't look much, but of course, in a week, it's nearly 4%. And you're saying, whoa, 4% even within a month, that's good return. But all those are generally pyramid schemes. So avoid where you're seeing very high returns. Don't be too quick to move in. Because we have some products that have been registered and licensed by the capital markets that give very high returns. But those are specialized products that you also need to understand how they operate. And you need to be able to take risk that is equivalent to those returns, so that you don't end up, at the end of the day, don't lose because you didn't get to understand. Now, secondly, please, I know it's like it may not sound like a red flag, but don't invest in something you don't understand. It is not going to help you sending a shoemaker to buy you precious stones, because a shoemaker doesn't understand how precious stones look like. Neither do you want to go just invest in shares, because, and you don't know what they are. Invest in yourself. Understand what they are first. If you are unable to invest in yourself, look for a professional who can help you, somebody who can give you a bit of knowledge that can help you enhance in terms of the investment. For me, those are the two key ones for now as 2026 begins. Don't go for very high interest, watch out, all right, in those areas. And then, of course, don't invest in what you don't know. Understand what you're investing in.
Very well, we are looking at smart choices for the year 2026 here on BizCheck, and we are taking a quick break, but when we come back, we will also be wrapping up on this, and especially if you want this year to be, you know, a far much better year than 2025 and the other previous year, and how to set your financial goals for 2026. Let's take a quick break. We'll be right back.
Kila Jumamosi saa 1 jioni kuna sauti mbili zinazotawala anga ya habari. Dada wawili pacha, magwiji wa ulingo wa habari.
Karibu sana katika Dira ya Magwiji.
Magwiji kwa upekee wa sauti, mtindo na maarifa.
Katika enzi ya sasa iliyosheheni mabadiliko,
tuko ange kukuletea taarifa, fafanuzi kutoka kila pembe ya dunia.
Jamila na Wanjiru wanakupeleka kwenye safari ya taarifa, uchambuzi na uhodari wa matukio yanayotikisa dunia.
Tunajizatiti kukupa taarifa sahihi na kwa wakati.
Habari kwa jicho la kitaalam.
Tuna hamu na hamamu katika kuuliza maswali stahiki yenye kuwajibisha.
Na sauti ya uhalisia.
Tupe sikio na macho kwa taarifa za kina.
Dira ya Magwiji, pacha wa habari. Kila Jumamosi, saa 1 jioni hapa KBC Channel 1.
Maradhi ya saratani.
Ndio najua, lakini nimejaribu kutaka kuacha, lakini hamu hainitoki.
Jaribu Maini. Jaribu.
Lazima nione kesho. Lazima nipe majibu kesho.
Chorembo. Takichorema mzuka chakula. Ama ni malaika?
Ni malaika kono.
Huyo mbuzi angenisaidia kulipia Cindy karo.
Usingempeleka kwenye shamba la wenyewe.
Mnanishtua. We're not gonna do something big. Kama nikusaidia Cindy, I'm in. Kristi, mbona imeandikwa sijalipa?
Umekuja peke yako Josh?
Nilikuwa nataka kupata loan ya school fees.
Ninaenda nikiwa tayari nitakwambia.
Kili sawa, si ndio? Asante. Haya.
Sawa. Muriyo mlokisha kwene. Umloha kumwaha nyanga.
Ujambo Yale maneno uliandika siku ile unakumbuka?
Ni kweli.
Hii maisha iko na majaribu mengi sana.
Kumesi mimi tu sina usingizi.
Peleka mtoto pale.
Nitagundu wakita nawe Yesu.
What is it to discern? What is it to hear God's voice? The Bible in the book of John tells us that my sheep hear my voice.
For you to hear the Holy Spirit speak to you, first of all, you must be a person of the word. Pia lazima uendelee ku read the word, because hakuna anyhow way unaweza sema that I will do kitu yenye God amenipatia kama sina njia nini zake.
Hearing God's voice starts from you having a relationship with God.
Welcome back to BizCheck. We're on the tail end of this conversation. We are looking at smart money choices for the year 2026. And we have Kennedy Munyoncho, who is the Director in Wealth Financial Services in charge of Capital Unit Trust. And we have CPA Esther Wamalo, who is a member of East Park. Ladies and gentlemen, we are on the tail end of this conversation. For which are some of the red flags to avoid when it comes to saving, Esther, and which are some of the smart money decisions that somebody should take in 2026?
Thank you so much. In terms of saving, ensure you have all the information. Get this information. It is your right. And you can seek professional advice as well, so that you will equip yourself with information before you take your money and save. In whatever scheme that it is, you ensure you have all the information. And as we've emphasized, be patient, start where you are, be patient, the returns will come, but it takes a bit of time. So be patient and don't think that you'll just get the returns, the high returns that you're thinking about, which you can, anybody who wants to take advantage of will tell you, only just to rip off all the money that you have. So be patient, get all the information that you have. Another thing, there's no right time to save. So don't say, don't wait until you make enough money. There's nothing like enough money. As my colleague had said, even if your salary, even if the returns from your business were tripled today, so will be your lifestyle. So start where you are, consistently save, consistently and just be patient, knowing very well that, you know, if you do that, it becomes part of you, part of it. It's a habit that you've formed, and in the long run, you'll be able to reap.
Ken, how can low-income earners genuinely invest? Because at the end of the day, if you're talking about you have nothing at the end of the month, then it becomes very difficult to invest. Or the take-home is a little bit, you know, on the lower end. How can low-income earners, or what are some of the options for them?
It's not about low-income earners, Njue. It's the principle. It's the principle. You see, if I'm earning 10,000 and I'm willing to set aside 50 bob every month, what is the principle or the habit? Saving. Okay?
Yeah.
So it doesn't matter how much you are earning. The issue, the habit that we must develop is, can I save out of the little that I am making? Because truth be told, Njue, you cannot earn 10,000 for 10 years. Year 2, you'll earn 15. Year 3, 16. Year 5, 20. Year 10, you'll be earning maybe 50,000. If you had the principle and the habit of investing little by little, you will be investing even much higher amounts when you earn more money. Now, you see, shares are very cheap. The stock market allows us to buy 100 shares, lowest, okay, or 3,000 shillings, whichever is lower. Whichever is lower, either you buy 100 shares or 3,000 bob. Now, 3,000 bob, even if you take a whole year to save 3,000 bob, you can buy shares. But the issue is we think of today and we think of what I have is so little, is not sufficient to do any investment. That is a big mistake. If the habit of putting aside little by little, even the low-income earners, who I don't want to call low-income earners, even the income earners, can be able to withdraw some money and be able to invest it. It is basically the habit, all right? And if I'm investing 3,000, don't expect 30,000 in 1 year. If I invest 3 million, you know, don't expect 10 million in 2 years, because it is directly proportional to the amount that you've invested and the interest that exists. The investment follows some criteria, lay down principles of doubling your money or bringing money home. So let's not discriminate. So long as you have a form of an income, you can invest. The stock market has made it possible that you can buy. I mean, today you can go buy shares for 300 bob. Do you know you can go with 300 bob today and buy shares?
300 shillings?
Yes!
Many Kenyans don't know.
Everett is 1.4 shillings. Everett is 1.4 bob. So if I have 1.4 and I'm buying 100 shares, it's 143 shillings. What are you talking about, man? That's the information we are saying doesn't exist. But it is there in the newspapers. You can go and say, this share is 2 bob. 2 bob. This is 5 shillings. Now, KPC is 9 bob, eh?
9 bob,
all right?
yes.
Historical says it will go up, maybe to 11, 12, then it will come down. All right? Some of us would prefer for it to come down first, then we buy.
You buy.
Yes, because that's how you make money.
Uh-huh.
That's how you make, not speculation,
Yeah.
that's how you make money. All right? So there is opportunity. I think it's just information and the willingness to take that risk and say, let me put it here and wait for 5 years and see what happens.
Oh.
Yeah.
And when it comes to investment, Esther, and we want to, you know, we even have some hustles, you know, you find you have something else that is, you know, bringing in some income. How do we measure whether an investment is truly working? Because you find sometimes somebody has maybe a shop, but before he or she realizes that it's not making anything and closes down, it has even eaten up the capital that you started or you began with. How do we measure whether something is doing well, the health of any investment that we make this year?
Back to the records. If you have proper records, you'll be able to, you will have indicators and you will point how are you doing financially in that business venture. So you've recorded your expenditures, you've recorded your income, and you can be able to see the trajectory and the trends. And back to the emphasis on having proper records, and depending with the size of your business or individual, if you're not able to do it, and that's where now where you seek professional advice. At ISPAC, we have qualified accountants who are able now to do for you your books and all that. But it's all about ensuring that you have proper records for you now to be able to gauge how you're doing. So definitely, when you're making losses, you can be able to see from the records that you have. So that will act as a guide to show you how you're doing. Yeah.
And Ken,
yeah.
I'm looking at financial stress that a number of Kenyans are mentioning that the economy isn't working very well, and they're hopeful that 2026 is going to bring some good tidings. And, you know, just like you said, you should just live below your means. This is easier said than done.
I agree. I agree.
And the financial discipline that we are talking about here,
yes,
it's very easy to talk about it, but very hard to implement. Because you have to do away with a lot of things.
Why I speak like that is because I've come through that process. It's not an easy process, Njue. Even doing a budget, how many Kenyans have a budget? Budget is very simple. A budget doesn't need money. It needs your will. Okay, let me now do a budget this month. Even me, right now, I'm revising my monthly budget. I just want to see where my money generally goes. It's not an easy thing. Me, who is an expert, it's not an easy thing. How about somebody who I'm trying to advise? That please, sit down, find out where your money is going. It is a very difficult thing, and it needs your willingness to say, I am serious about this thing. If that will is not there, it doesn't matter. 2026 can give us good returns. GDP can increase, but you will not benefit because you never took the will to sit down and say, my life must change. All right? Back to that discipline. My life must change. You can't live on inertia and expect returns in your life. You must have a reason, you must have a plan, you must know a why I am doing what I'm doing for me to be able to invest in what I want to invest. Until that happens, I have no problem singing until I retire myself from singing, not from life, from singing. But let 1 or 2 people listen and say, by the way, he's saying sense, but until I take action, it doesn't matter, it's just information. Yeah.
Ladies and gentlemen, my director informs me we are out of time, so I'm going to give you each a minute for your closing statement, and especially when it comes to advising Kenyans who are watching us on how basically to look forward to 2026 and avoid the every time January hangovers, financial hangovers. Esther?
Back to the final thing is we just have to go back to financial management. We have to go back to financial management. It is not easy, but it's doable. You have to critically look at yourself, analyze your situation because it's individual based, and take that bold step and ensure that your finances are in order. Even with the gloomy economy, you can be able to invest, and you start where you are with what you have. It is the discipline, and you ensure the mindset that you have, you're in it for the long run. As Warren Buffett says, if you don't make money work for you when you're asleep, you will work for the rest of your life. So let us purpose to ensure that we have money working for us even as we sleep. Thank you.
Ken?
I would like to repeat, financial goals are going to be critical for your success in 2026. Even clearing your debt is a financial goal. Setting up an emergency fund is an emergency goal. I mean, is a financial goal. Learning to pay yourself first is a financial goal. Just tell yourself, this year, I have to do one of these. And once you do that, for me, I need to be challenged that who has paid himself first for the rest of the year and they spent January money in December. Thank you.
Very, very well said. In uncertain times, smart money is not about how much money you're making or you're earning, but how well you plan, protect, and grow what you have. The choices that you make in 2026, I'm talking about financial choices, may determine your financial freedom for years to come. That's why we put a cap on this very practical and very interesting conversation on smart choices, smart money choices for the year 2026, and the professionals here have really put it into context. I've been speaking to CPA Esther Wamalwa, who is a member of ISPAC and also a financial services expert, and just next to her we have Kennedy Monyoncho, who is Director NWELL Financial Services in charge of Capital Unit Trust. Thank you so much, ladies and gentlemen, for your insight. I'm looking forward for this conversation again, and let's see, maybe we can take stock after a couple of months. We take stock.
We come and see where
Yeah.
people reached. You don't remember what you said.
Yeah, we really need to check that and see our pockets whether 2026 can offer better tidings. On the second hour, we'll be looking at matters milk production, and I will be having Michelle Arum from the Hughes, Kenya. We'll be talking about understanding how feeding, how enhancing production, even through quality feeds for better milk production. On the second hour, let's take it.
As of May 2025, the National Transport and Safety Authority, NTSA, reported that Kenya had thus far registered over 9,000 electric vehicles. But these vehicles are majorly imported, with foreign markets as seen as pioneers of electric vehicle manufacturing. However, local manufacturers are rising to the occasion, joining in the race armed with the vision of producing locally made EVs.
Going forward, this vehicle shall be able to be fabricated not necessarily from one particular place, but people who are licensed as body fabricators of vehicles, they can fabricate depending on the locality needs.
This particular prototype solar EV developed by Eco Mobilis uses these solar panels on its roof to harness the sun's energy, and then tops up lithium-ion batteries on the base of the vehicle to store up charge every other time. So when the vehicle is turned on, the display on the dashboard shows parameters. The charge controller on the solar panel assists other auxiliary functions, such as the horn, wipers and lights. The controls on this vehicle includes a brake and an acceleration pedal. Without an engine, it lacks the use of a clutch system entirely. Paul Waweru, the Chief Operating Officer at Eco Mobilis, demonstrates the ease at which motion is achieved.
Now I'm turning the key. So now the vehicle is on. If I disengage the handbrake like that, so I just need to press the accelerator a bit, and the vehicle starts moving.
This notwithstanding, local manufacturers say the EV development journey presents what they say are gaps that can still be filled to assure the growth of the local EV manufacturing industry.
In an ordinary factory, you are likely to face a lot of challenges, including high tariffs on electricity and other resources that are very important for you to be able to build such a vehicle. Again, we are looking at the question of financing because we need a lot of financing. This venture is extremely expensive.
Companies like Ecomobilas say they are still optimistic about the future in local manufacturing. Kenya is making stride in e-mobility adoption. However, issues like that of the e-mobility draft policy is yet to capture the local essence of local manufacturing of e-mobility vehicles. Alan Auko, Take One.
Welcome back to KBC News Check. And after Smart Money Choices 2026, now we are looking at Smart Milk and Poultry Production 2026. Bear me witness that milk is one of Kenya's most important agricultural product, and many farmers feeding families, you know, and driving rural economies. Yet many dairy farmers are frustrated, yet they have already invested in improved breeds, they have invested in feeds, but they do not exactly get the right, you know, the right returns for their products. So how do we change all this in this new year 2026? Allow me to rope in my panel, which encompasses Michelle Arum, who is a laboratory associate at the Hughes, Kenya.
Yes.
I mentioned it well. Yes. To help us just understand how, you know, to get the right foundation for successful milk and poultry production. Karibu sana the program.
Thank you so much.
The Hughes, maybe you, in a nutshell, what exactly do you do? Because we've mentioned milk and some poultry as well.
So the Hughes is a Dutch company that is currently setting up in Kenya. We produce animal feeds, and our product range ranges from ruminants, poultry, and swine. Yes, yes.
For how long have you operated in the country?
So in the country, we've set up our state-of-the-art facility that will be launching on the 18th of February. However, the company itself, as the Hughes, has been in operation for over 100 years. Yes.
From your perspective, would you describe the current state of milk and poultry production in Kenya? Because we have seen we are importing a lot of eggs as well, and the farmers are not getting what they should get when it comes to milk.
Yes.
Yeah. They just get some milk, you know, for consumption and, you know, maybe a liter or two for sale, but they can get more.
Yes, they can get more. And it all starts from the quality of feeds. It's not about feeding more, because just because you're feeding more doesn't mean it's going to give you more in return. It's about the quality of feeds. It's about consistent quality, in that the farmer is able to know, even in a month's time, I'm still able to get the same kind of feed that I'm getting today. And I'm able to predict what outcome I'm going to get out of my species or animals.
Maybe that answers the question why many farmers are still getting low yield despite improved breeds, because we have improved breeds both in poultry and also in dairy.
Yes. Just because their breed is good doesn't mean the quality, the output is going to be good. It goes back to the quality of feed, in that the animal is able to convert the feed that is being given into something out of it. If it's milk, if it's egg. So it all goes back to the quality of feed. And then the breed or the genetics of the animal is going to optimize that feed to produce the best out of it.
Speaking of feed,
how
much of milk production success can be pegged to the feeds that the animal is consuming?
70 to 80%. It all goes back to the feed. Yes, yes.
And after that, we have seen Kenya has a number of breeds, both local and the improved ones. And it's a good thing that a number of companies have also come up to try and you know, make better breeds by artificial insemination as well. And from where you sit and from when you began, how far have we gone in terms of having these breeds that we only see on YouTube and you've talked about Netherlands?
Yes, Netherlands. Yes, yes.
They are doing very well in terms of milk production.
Yes. And it all goes back to feed quality. Yes. So what we are bringing in Kenya is a consistent quality feed, in that we're able to trace back the raw materials that we're using to produce the raw materials. And that is what the Netherlands are doing, in that they're able to trace back traceability of what they're using in their feed, what they're using in their formulations. So the formulations is animal-based. It's not just general. It's not just because it's all cows or it's all poultry. Now we're going to make a general feed. So there's the formulation aspect where the feed is tailored to the kind of animals that are present in that country. So that is what, as the Hughes, we are bringing in on board, in that our feed is specialized and tailored to the animals that we have in Kenya, the breeds that we have in Kenya, in order to optimize milk production and egg production. Yes.
And from a laboratory perspective, what constitutes or qualifies as quality daily feed?
So, just like I've said, it all goes back to formulation. So, the formulation team is able to look into what kind of breeds we have in Kenya. What kind of needs do these breeds need? And then you go back to the raw materials. So this raw material can be able to offer this kind of protein, or this raw material can be able to offer this kind of minerals. So how much do we constitute it? And in the laboratory, what we test is to ensure that raw material that is being brought into the factory meets those standards. And during production, we are having regular checks, in that at this stage of production, we take a sample, we check. Is it still within what we are hoping to get out of it? At a different stage again, because there's different things that happen during production. So the feed is subjected to different kinds of treatment. So after this treatment, after heating, after crushing, is it still having the kind of protein, for instance, that we're looking for? At the end of it, just before bagging, is it still meeting the specifications you are looking for? And if it doesn't, we go back to the production line and we're able to rework that feed in order to produce what we are looking for. And it is matching with the formulations, what formulation set up.
And I still believe that you've talked about formulation, so what this means is that this is the reason why you find two feeds which look quite the same, and maybe if it's two bags, you'll find they're almost similar prices, but produce very different milk yields.
Yes, yes. Formulation, because our formulations is tailored to the specific breed, the specific needs of the animal. It's not just a general, one sample, one feed cuts across all. It is tailored to our farmers.
And I have seen some farmers decide not to buy feeds, but to make it themselves. There is no quality assurance there. It's more or less like what they say, patapotea. You know, it might work, it might not work. But for some farmers, it's working. Would you encourage farmers to go this route? Because one thing is that they are bringing the cost down. They can get the maize, they can get the seeds, the sunflower, the soya. They can, you know, mill them and, you know, have a feed that maybe will cater for them for a couple of months. Would you advise the farmers to go that route?
No, I wouldn't. Because there's no consistency. Because where are they sourcing the raw materials from? Where are they, what is the quality of that raw material including their feed? They don't have any background information on that. Is there any KBC regulation? Because at this point, even as the Hughes, we still bank our quality of feeds back to KBC as a guiding factor. And as farmers, KBC is like their anchor or their, you know, their watch station, in that they're able to go back to KBC and be like, KBC has done research and is like advises the animal feed to be able to meet this kind of nutrition. And actually, the Hughes is offering this. But you as a farmer who is, you know, making this formulation, what backing do you have? What any lab support do you have? You know, you're subjecting your feed to different kind of treatment when you're mixing and all that. You don't have any background information of that. So it's more of like a chance. So one time it might work, the next time it may not work. So it's more of like a chance, and you realize that your production is always fluctuating. One time it's high, the next time it's not high. It's not, you know, it's low. So I wouldn't advise farmers to go that route. Yeah.
And what are some of the lessons that we can pick up from countries like Netherlands, where, you know, they have a very robust dairy sector?
Yeah. So one of the lessons would be consistency. Consistency in the quality of raw materials that is coming in. Consistency in the quality of feed that are being produced. Another thing is having the production close to the farmers, and that is why as the Hughes, we've set up a state-of-the-art facility at the river, in that we're bringing the feed close to the farmers, in that we're able to trace back what raw materials are we bringing in. In case of any complaint, we even have channels customers are able to log in their channels in an online system, and at the Hughes in our offices will receive the complaint and able to address it immediately as soon as possible. So even having the factory close to the farmers is key.
And how can a farmer detect the early signs that the quality of the feed is the one limiting his or her production?
It goes back to the produce. For instance, something like dairy, the amount of milk the cow is producing. We even have technical support that goes to the farmers and able to look at the farm, the cows or the chicken, the poultry that the farmer has, and they will ask you questions, leading questions. As you as a farmer, you can tell. For instance, yesterday I was producing 10 liters of milk. Today it's 9 liters. Of course, that is a drop. So the technical support, they do monitor that, and they're able to advise you. There's something changing. For example, if it's a cow, the skin, how is it looking like? Supposed to be supple, supposed to be soft and shiny. How is the cow looking like? The fecal matter from the cow, how is it looking like? So it's able to advise you the state of the rumen in the cow. If it's egg production, how many eggs did your chicken produce, yesterday? And you see something like poultry, the results are instant. Because yesterday it was producing 3 trays, today it's producing 2 trays. There is a problem. But for cow, it might take some time, but you still, as a farmer, you need to keep records to be able to monitor how your cows or how your animals are performing over time. Yes.
And what are some of the innovations shaping up the future of dairy farming in Kenya and poultry? We have seen a number of new breeds in terms of AI, that is artificial insemination. And when it comes to poultry, we've also seen a number of hybrids. A couple of years, you've never heard of Kenyeji improved, you've never heard of some of the breeds that we are having now. What are some of these innovations that are shaping up the dairy and the poultry sector, and how can farmers tap into that?
So one of the innovation is consistent testing. This is consistent testing of the feed. What are you feeding, your animals? What are you channeling into your animal? And as the Hughes, we even offer free testing laboratory services to our farmers, in that you are able to test for you the quality of feed you have, and able to advise you, this is the quality of feed, how is it going to perform? Or you need to change a few number of things. Additionally, even offer forage testing. So the grass that the cows eat, how is it looking like? How is it going to perform when you give it to your animals? So that is also an innovation that the Hughes has, yes.
And from where you sit, what are some of the mistakes that dairy farmers are making, and even poultry farmers? You find somebody has 1,000 chicks, maybe it comes to vaccination or it misses something, and then you find that one chicken that is not feeding well ends up taking out the whole flock. And when it comes to dairy, you find somebody with a very good breed, but when you hear how many kilos of milk or how many liters of milk that somebody is making every day, then you'll find there's certainly something.
So I think one mistake is people assume, feeding more is more output. So a farmer ends up spending a lot on feed, or even cheap feeds. Like this one is maybe 20 shillings. Let me invest in this one. Let me get this. Compared to this other brand, is 50 shillings. Why am I investing more? So that is one mistake farmers do, assuming cheap is cheap is cheap, but in the long run, cheap is expensive. So you end up feeding your animals more and more and more, but then the output is very little. The feed quality is very low, so the animal takes in more. It looks big, it looks fat, but the conversion rate of that feed is low. So at the end of the day, you have very little output out of that feed.
And what are some of the simple feeding improvements give the best yield? And it's more or less like an advice that you can give farmers out there. Some of the feeding methods, some of the feeding that maybe if you feed your cow 3 or 4 times a day, maybe what routine should somebody maybe change for in terms of making the cow maybe a little bit comfortable? We've seen cows even have mattresses, some even have music. These are some of the things that, will improve dairy farming.
Yes. In terms of feeding, there's no one blanket covers all, because we have different breeds, we have different genetics, we have different species. So we offer technical advice tailored to your animals. So we have specialists who come to your farm, look at your animals, get a history of your animals, and be able to advise you, this is the best approach, this is the best feeding approach you need to use to your farmer for optimized output out of it. Yes, and there's something like the comfortable living, like you've said, your mattresses.
Yeah.
That is common. That is given. It comes to wind towards the poultry. How much light you control with the chicken for optimized eggs produce. There's all of that, but there's also personalized, advice towards the farmers. Yeah.
Do you work with cooperatives or even extension officers to support better feeding practices? Just like you said, it's not about how much you're giving the cow or the chickens, it's about what you are giving them.
Yeah, we are hoping to bring in cooperatives on board. As for now, we are working with individual farmers. So our technical support is able to walk into farmers, and offer technical support. But with time, we're hoping to bring in cooperatives on board.
And how many farmers are we talking about that you're working with now?
It's quite a number. Because we are countrywide. So we're not we're not localized.
No.
We are countrywide. We offer support, countrywide. Yeah.
And how can laboratory results give better feeding decisions on the farm?
Laboratory results give you feedback, give you a background of what you're offering. For instance, if your cow is supposed to have this amount of protein, if I give you laboratory results and I tell you this is the amount of protein present in this feed, you're able to know, yes, I'm still on the right track, or I need to adjust a few things towards my feeding program. So laboratory results is very important in feeding. Yeah.
If I'm a farmer and I want to increase the milk production of my cows immediately, which is the first advice you can give me as a farmer?
Feeding, the feed quality. Check your feed quality. Yes, check your feed quality in that, because you want the cow to optimize the rumen, the food in the rumen. So check your feed quality. This is both the dairy meal and the forage that is being fed to the cow. Yeah.
When it comes to accessibility of feeds, how accessible are feeds, especially for a company that has been out there for so many years, but now you're trying to, muscle out some of the most established companies. What exactly would you tell farmers? This is something unique that we are giving you as the Hughes.
Yeah. So we have distributors throughout the country. We have sales agents throughout the country. We have technical salespeople who offer expert advice throughout the country. We even have salespeople throughout the country. So our feed is accessible through those shops.
How different is it from other feeds, or what new are you bringing? What new thing you're bringing to the farmers?
We are offering, technical support. We are offering free laboratory testing. So a farmer is able to work from an point to not just, selling you the feed and, sitting back and, waiting for your money. No, we go the extra step and give you feed, still test for you, open to feedback in case of any customer complaint, and we have the traceability channel, we have customer complaint channel, and we also have a backing of science that has been studied. Remember, the company has been in existence for over 100 years. So there's simply nothing new, when it comes to animal feed, animal nutrition. Yes.
And identifying the right breeds, because you find a farmer who has about 10 herds of cattle.
Yes.
But unfortunately, they're not the right ones for milk production.
Yes.
This is information that he or she doesn't have. And when it comes to feed as well, he or she needs this information. How are you working to ensure that this farmer not only knows about the breeds that are right for what he or she wants, because there are ones who want meat, there are others who want cows specifically for milk production. What is the one advice that you're going to give them, especially when it comes to choosing the right breeds and choosing the right feeds?
So this is comes to the technical support that we have. So we don't have one answer covering all. So we have the technical support who will come to your farm, assess your animals, and then offer advice out of it. So what kind of genetics does your animals have? What kind of breed is your animal? And then out of there, we're able to advise you or tailor a feed to be able to, to optimize your output. Yes.
Being a lab scientist, so to speak, how often should feeds be tested for reliable results?
Every batch. Every batch that is produced is tested.
Every batch?
Every batch. And not just the final. Our testing begins at raw material intake. So once a truck we have incoming raw material, it will wait. We get samples, we test it. Is it meeting specification or not? It's meeting, yes, let it in. During production, we have different stages where we sample and analyze it. And we're able to advise the production team, it's going well, keep going. It's not going well, please adjust a few things. Before we bag the feeds, we also have testing. So even in one batch, we have several testing points before a bag is before a feed is bagged. And also before dispatch, we also do a final testing. And when we are dispatching a feed to a customer, we also provide a certificate of analysis. You know, we have a delivery note and all that, and just a certificate of analysis to tell you that whatever we are providing, we are selling to you, this is how it looks like. So as a farmer, you have a quick overview of what you're receiving. Yes.
Allow me to revisit what I had mentioned earlier on. You'll find that some farmers are preferring to, manufacture their own feeds. You know, they buy the maize, all the seeds, and then they mill them and mix them together. Which are ingredients that you have seen being overused or underused? Because there are some farmers who are opting to do this on their own.
So I wouldn't really know, because there is no standard procedure on what every farmer does, or those who are mixing for themselves they do. So everyone mixes in from their own point of advice. They assume, and then there is so much information. On the internet, everyone feels like they're an expert in a particular field. So everyone does everything their own way, and I don't have a particular answer and can tell you they use salt of maize or they use salt of wheat, or yeah. Yes.
Let's shift a little to poultry farming. From where you sit, how far have we come in terms of improving the quality of feeds in the country?
So still just like dairy farming, people are still doing the home mixing for themselves when it comes to poultry farming. So the results are not really there. One day it's there, one day it's not there. And there's no consistency, still the same in poultry farming. Yes.
And when it comes to feeds, and especially the chicken ones, because sometimes a lot of Kenyans, prefer the free range, where you just let them fend for themselves, and in the evening you just
you let them home.
Let them home again, pick up the few eggs that they are laid.
Yes.
Why would it be so important for a farmer to have a feeding plan, which entails, buying certified products, including if it's the chicken, the chick mash, if it's for every cadre of the chicken, if it's the broilers, if the Kenyaji improved that we have seen?
At the end of it is predictability. So you want to be able to know how much eggs I'm going to get, at this period, because there's also how a chicken is supposed to behave. At 20 weeks, it's supposed to be producing this amount of eggs. At 25 weeks, this is supposed to be producing this amount of eggs. So once you bring in quality feeds, you're able to predict how much I'm expecting out of this. And you're able to even, you as a farmer, plan ahead. How am I going to improve or boost my profits? How am I going to, improve my yields and all that? And in case of any slight drop, you can pick it out easily. As opposed to, just letting them roam. I mean, at the end of the day, garbage in, garbage out. So you don't know what they're feeding out there. So whatever they're feeding is what they're going to produce. But when it comes to quality feed, you are assured of what you're going to get out of it. Yes.
How important is it for a farmer, a poultry farmer, and also a dairy farmer, to keep records, and especially when it comes to what is feeding the animal?
It's very, very important, because if a technical person is coming to your farm and he wants to, assess you and give you a feeding program on advice how to optimize your feeding, your output out of your animals, they will need records. They will need to know, how have you been feeding your animals? How have they been responding? What medication have you been giving your animals? Out of that, they're able to customize a program to be able to get the most out of your feed. Yes.
You're a big organizations, having a well-established farm in Europe.
Yes.
And now you're here in Kenya. How accessible is feed testing, especially for small-scale farmers, both for poultry and for
Very, very accessible. Very accessible. Like I said, we offer free testing in our laboratory to our farmers.
Free testing?
Free testing to our farmers. Yes.
And it goes a long way. Do farmers know even there's this kind of free testing where you're able to be told exactly this is what and what you should be feeding your livestock or even your poultry? Do they really have that information?
We're hoping this out of this they're able to know. Yes.
Yeah. This is a good platform.
Yes, it's a good platform for them to be able to know that we offer free testing to our farmers. Yes. So because I'm able to advise you, you give this feed, we produced this feed. We give you this feed, you fed your animals, but it's not giving the output you're expecting or we promised. Please, what batch number is it? We're able to go back to our storage, because we store every raw material that comes in. We store every finished product that is produced. So we're able to go back into our sample storage and retrieve the sample and offer free testing. And if you as a farmer feel like, no, I still don't want that result, I want whatever I have on farm, we're able to retrieve it and test it and able to advise it out of it.
From where you sit, what policy or regulatory gaps do exist in feed quality control in Kenya?
I feel like for Kenya, there's robust standards and regulations when it comes to animal feed. So there's KBC that stands in the gap and protects farmers and also protects feed manufacturers. There is ACAFIMA that comes in and is able to give a guide on what farmers should expect. There's the Kenya Association of Manufacturers that also guards the consumers out of all this.
Yeah, you're a private entity. What do you think government and industry should prioritize when it comes to improving dairy production and poultry in the country? Because I have seen a lot of eggs from our neighbors, Uganda and Tanzania.
I feel like as an organization, you can just keep providing accessible quality feed. And that is why we set up a factory in Kenya. And we're hoping that the government will be able to even lower the cost of production, able to make the feeds cheap and affordable to even our farmers, so that the animal feed doesn't look like it's for those people who are producing or have large amount of animals. It can be able to accessible to those people who are even doing small scale farming. Yes.
And is investing in quality feed economically viable for small scale farmers?
Yes, it is. It is, because you don't want to do, how can I call it, an expensive hobby that doesn't give in return. So even if you have 50 chicken and out of it, you can be able to sell the amount of eggs that come out of it and get a small income out of it and do something else with it. Like the program that has just left before, they're talking about saving and investing, and you talked about even that little money that you have, you can still save it. So there's no little money even in small scale farming. Yes.
There's this issue I've noticed, and I had 2 cows which produced milk, but I didn't find it quite viable, and especially when it comes to feed. When it comes to the cost of feed, a lot of farmers are shying away from scaling it up because of the cost, which is becoming quite. How can farmers manage cost wisely?
So you first look at the end product. How much are you going? Because if you look at the cost, you're going to opt for quality, for cheap products. You're going to go for, let me go for this, let me just send my cows into the field and eat whatever they are eating. But what is it they're eating? How quality is it? Whatever they're eating is what they're going to produce. At the end of it, you're going to get low quality milk. So it's important that you don't look at the initial cost. Yes, it's big, but do the cost analysis. If I'm going to invest 100 shillings of feed compared to just letting them roam around, this 100 shillings, how much milk is it going to give me? If I'm going to sell this milk, how much profit am I going to get out of it? So there's the whole chain. Yes, cost is important, but let us also look at the end goal. Because at the end of it, the more you feed low quality feed, the more your animal is going to struggle to digest that feed, to try and stabilize in order to produce something out of it. Not even just quality, just something out of it. Because it's not about even the volume of milk or the volume of eggs. How quality is it? The quality of eggs, can they easily break? The quality of milk, the amount of butter or the fat in the milk. So this is also very important. Yeah.
And you've mentioned the quality of milk, quality of our eggs. In the region, how are we doing in terms of quality of the products that we get from our cows and from our eggs?
Again, that is quite robust, because we are all feeding different quality of feeds. There are those who free range, there are those who do invest in the quality of feeds. So it's quite not one answer fit all. But we are trying. We are hoping to get better. We are trying. There's always room for improvement. As a country.
And what is the role of technology in the feed quality management? And how can we ensure that the feed that is produced in our country is of right quality, and also, of course, will bring something for the farmers?
So technology is important because, for instance, when it comes to formulations, I'm not just going to give you feed, because I mixed maize, I mixed this and made a feed and gave it to you. But what is the basics? What is the background behind that feed? What amount of protein is it? What amount of starch is in that feed? So out of this, because as a company we do use technology extensively, even in production, even in formulation, in the testing, in the laboratory. So there is an extensive use of technology. Remember, we built a state-of-the-art facility, and there is new technology out of it, technology that has been studied over time. And we are able to assure farmers that out of it, you're going to get a good output. Yes.
How much of milk production and egg production success can be attributed to quality, the feed quality? 70 to 80%. Yes. 70 to 80%?
Yes. So it all goes back to feed. It all goes back to feed. So there's the additional, a cow needs a good place to stay. I mean, you can't, even you as a human being, you can't stay in a dirty place. Your optimization will not be good. But at the end of it, it's what the animal feeds. It's able to convert that feed into an output. Yes.
And the cost of production, especially animal feeds, is in Kenya still on the higher side.
Yes.
You look at the cost, even if you give us a practical one bag of maybe of dairy meal, it could be inaccessible to a number of farmers, and especially the small-scale farmers. What options do these farmers have? So
we're able to, package the feed into smaller packages and able to access to every farmer, because you're not just catering for, the large-scale farmers. Every farmer is important, because every farmer needs an output out of it. That's why they're investing into it, and we're going to make sure that you as a farmer get the most out of your investment, no matter how little it is. Yes.
When it comes to the poultry, because you're also into poultry.
Yes.
We still do the same processes of quality check in terms of feeds as well?
Yes, our quality checks cuts across. So we don't not just check, because it's dairy or it needs more attention. Every animal needs all the same kind of attention, and it's even personalized, because for poultry there is more input. Remember, for poultry you're able to see the results immediately, almost immediately. It doesn't take time as compared to cows. So if you feed the wrong feed, tomorrow the eggs will drop. Or it may not drop, but the quality of eggs, the shell might be weak, the color of the yolk might change. So it's almost immediate. So still, the quality checks cuts across.
And from where you sit, how can you describe the current state of milk production and poultry, especially in the last couple of years? Because there have been some great improvement, but we are still importing eggs from our neighbors in Uganda and Tanzania.
So there's still room for improvement, like you said, and we are hoping, not really we are hoping, we are promising to provide quality feeds in that we cover that gap, the improvement gap. We are promising quality feeds, and out of these quality feeds, we assure our customers of output out of it.
Here on, I had a discussion in regards to smart financial choices, where we are engaging experts who are helping out Kenyans. Now, when it comes to extension officers, because some of these products, Kenyans and even farmers do not know that, you can be testing is free, advice is free as well.
Yes.
But this information is not getting to the right people.
Yes.
And I believe your organization, tapping into your robustness and a big company, you can reach out to these farmers through the extension officers, who in turn will also give you a good image and a good background of how the farmers are doing.
Yes, we are planning to collaborate with the extension officers. I mean, we can't work independently. We can't work as an island. I mean, we just set up in Kenya, and we need everyone. We need everyone's support. So we are going to bring them on board, and they're able to give us, this is the kind of farmers we have, or this is the kind of quality we have here. And we're even able to advise the small, the small scale, those who are producing small scale feeds. We're able to advise them and be like, yeah, as much as you are doing this, we're able to provide this in return. In that we have background information on what we are offering, as opposed to you as where you're working blindly. And we can only get this information out of the extension officers, just like you've seen. Yes.
You mentioned to me that on 18th you'll be having a launch.
Yes.
What exactly will it be for? And you already spread throughout the country.
Yes.
What exactly will be launching, and how will it help farmers, both poultry and dairy?
So we've built a state-of-the-art factory with a state-of-the-art laboratory. So we are now, officially telling our farmers, yes, we've been producing, we've been doing trials and all that just to be able to optimize the feed. In that, by the time it's getting to 18th, we are now telling farmers we are good to go. Our feed is quality, it's been tested and all that. We are going to assure you of this result. And these farmers have been using our feed. They can be able to give you, testimonials on how our feed is performing. And out of this, our factory is close by to our farmers. So we're able to get to our farmers easily as compared to when it was, just set up in Netherlands or, something like that, because that is far. By the time information gets there, as much as the technology, there's testing and then there's feedback. So here there's proximity to the farmers. And that is why we're trying to assure our farmers, please come and see. It's not just, here seeing, promising you good feed and all that. Come and see where it's being produced. Come and see the processes in our production. And this is our promise of quality and consistency, because that is also important, consistency.
Yes. And as we wrap up, I would like you to speak to the farmers and tell them exactly why it is very, very important to be keen on exactly what you're giving your animal, because at the end of the day, it's not, just like you said, it's not about the size of the animal, and it's not how it looks. At the end of the day, it's what is in whatever that farmer is feeding that cow or that chicken.
Yes. So my last advice to the farmers is whatever you give your animals is whatever is going to come out. And as the Hughes, we are promising quality and consistent feed, in that whatever you're giving you this month is what you're going to give you next month and is what we're going to give you next year. In that you as a farmer, you're able to predict your output and you're able to plan ahead. Remember, it's not just the amount of feed, it's not the amount of feed the animal eats, it's amount of feed that animal converts into nutritional, and it absorbs it into the body and then converts it into milk or eggs. Yes.
Indeed. Your final comments?
We'll be launching our factory on the 18th of February. You're all welcome.
Thank you so much. And indeed, as they say, it's what you're feeding the cow. Of course, garbage in, garbage out. We are looking at enhancing production through quality feeds. That is also something that Kenyans, we are keeping keen on. And as you've heard, the Hughes are also on the forefront to ensure that happens. Because at the end of the day, it's not what the cow is eating, it's exactly what is in that feed that at the end of the day counts. Many thanks indeed for joining us on this production. We have been looking at the milk production and quality feeds, including for poultry. You feed your cows right, you feed your chicken right, you get your milk and your eggs right. Many thanks indeed. I've been hosting Michelle Arum, who is a lab associate at the Hughes, Kenya, where we have been putting into perspective issues surrounding poultry and dairy in regards to their feeds. Many thanks indeed for joining us on this edition of Beast Check. Many thanks indeed. My name is Njue, and Lucy Maura has been our sign language interpreter for this live newscast. I'm giving the baton to the Swahili desk for Kurunzi and Tamrini. Good afternoon.
This old onsen in Gumma inspired the bathhouse that's the main setting for the anime movie Spirited Away. The story of a young girl struggling to save her parents transformed into animals in another world. The house and this red bridge remind us of the world depicted in the movie. The Japanese term Seichi Junrei, literally pilgrimage, means visiting locations described in anime or manga comics. The pilgrims delight in soaking up the atmosphere and even recreating favorite scenes. Hakone Yumoto in Kanagawa was a popular tourist destination even before it became one of the main settings for the hugely influential anime Neon Genesis Evangelion, which depicts a battle with aliens for the survival of the human race. The movie's official store in Hakone Yumoto has products you can only buy here, a powerful draw for anime pilgrims. Coming to a sacred place like this shows my love for anime.
Actually, a friend of mine came to Japan last year and told me about it, so I was pretty excited to come and see it myself.
Another destination for anime fans is Numazu in Shizuoka. The city features in the anime Love, Live, Sunshine. This is a story of 9 high school girls who form an idol group to save their community from the crisis caused by the planned closing of their school. This ryokan was the model for the main character's home. And this local beach is where the girls confided their problems to each other. The anime depicts the area accurately and in great detail, so a pilgrimage here transports fans right into the world of the stories. Numazu City responded to this growing trend by collaborating with the anime producers. With images from the anime everywhere, the whole city sometimes seems to have a Love, Live, Sunshine theme. Love for this anime is even bringing fans to live in Numazu. It's rather unique the way these young people are starting to move here. The anime may be their initial motivation for coming to live here, but I'm sure that as they get to know Numazu, they'll fall in love with our city. It was his passion for Love, Live, Sunshine that brought Shotaro to Numazu. He was inspired by the way its main characters worked hard to save and revitalize their community. By coming to this sacred place, I wish to see something like views we may be able to reach after a long search for light. This is a place I could do that. Shotaro was warmly welcomed by the locals, especially Mine Tomomi, owner of a photo studio. You're amazing! Such a clear and positive attitude. Shotaro is now employed by Numazu City to promote the community, running seminars for people thinking of moving here. I feel like I'm now living the life I saw in the